Hey guys, Crypto Sunday and a red week, but nothing too bad, and a hell of a lot going on at the moment. So that's 4,000 down, fairly sort of spread across the board, but a few sort of outliers. But let's get into the news. So I think the US Senate have sort of suddenly got a bit nervy and sort of thinking they're behind, and they've passed sort of a flurry of legislation in the last week. There were sort of various other pieces of legislation that don't really affect crypto, but they passed about seven in the last week. They've done a Stablecoins Act, a Keep Your Coins Act, which is sort of a self-custody protection. There were some people sort of trying to go after the FTX failure, saying that nobody should be able to custody their own coins, which is pretty poor. So you've had Republican Warren Davidson sort of has been big part behind this. He introduced the Keep Your Coins Act of 2023, and yeah, basically just saying, we can't let FTX sort of mean that no one can hold their own coins, because you would see it really as the safest way to hold crypto. And there was a sort of more broad crypto legislation in general, which I don't think is here, that they've been sort of back and forth on, which would be determining what is and what isn't a security and who gets to oversee it, the SEC or the CFTC, the commodities side. So yeah, there's been lots and lots of sort of back and forth and sort of crypto haters. You had Brad Sherman, the sort of big popular crypto hater. I've sort of shown a couple of clips of him before, making some crazy statements. There was another one, I couldn't find a clip of it, but he said cryptocurrency literally means hidden money. And the chair, I think it was McHenry, corrected him and said that cryptocurrency basically means cryptography and the solving of sort of puzzles, basically. So yeah, that was quite funny. But yeah, interesting to sort of see them finally pulling their finger out and getting some legislation. This goes from the Senate to the House now, House of Representatives, sort of like the UK's House of Lords going to the Houses of Parliament. And yeah, basically we'll have to see if it gets through the House unaltered, because that is probably less likely. So as I say, they've been putting through a lot of other bills, and they did their Department of Defence bill, which I guess they're much more keen on, a much bigger bill. $886 billion for the Department of Defence, and sort of slotted in there, they were able to get some legislation on crypto mixers, which I've sort of never been particularly keen on. This is sort of trying to obfuscate where your coins are from. You sort of put a Bitcoin in there and it sort of shuffles it around and splits it up and tries to basically hide where it's come from. People were sort of saying that this is people's right and they should be allowed to use it, but I can't really see any sort of legitimate uses that you would want for one. So I don't think it's the end of the world that these are sort of getting outlawed. And there was a big push on sort of legislating against privacy coins. So again, they don't seem to mind crypto, and when it's basically all laid out for everyone to see, and you can see what they're doing with it. So it's part of the reason I've never been sort of particularly keen on things like Monero and Zcash and sort of more privacy coins and sort of privacy focused updates to existing coins. Litecoin sort of had a big privacy push with some of their updates last year. So yeah, the US sort of want to go after that, and they're sort of as I say, slotting it into other bills, hoping that it can just get through, and then they'll say, right, we've got legislation now, because they won't want to reject the bigger bill, or sort of be debating, a small part of it and delaying the $800 billion for the Department of Defense. So, yeah, we'll see if that one goes through as well. Oh, and this was the one that Senator Loomis and Gillibrand have been sort of working together on, but they also actually had to call in our favourite Elizabeth Warren, the sort of extremely anti-crypto senator, and yeah, she's sort of basically saying everything to do with crypto is bad, so I guess she's happy to sort of jump on board this, essentially trying to ban mixers and privacy coins, even if she does just think the whole industry should be banned. So yeah, funny to see those two sort of coming together, or those three or four. This was a bit of an intriguing one. It was actually a report from last year, but has been sort of doing the rounds recently since BlackRock's ETF application. A report basically analysing the sort of risk-adjusted return of various assets, basically, and asset classes. Their finding basically was if you started with a 60-40 equity bond portfolio, which is sort of very popular over the decades, basically how much Bitcoin would you add to make it optimal in terms of sort of return adjusted for the volatility. So people don't, if you're going for 60-40 equity bonds, you presumably don't like volatility. So they're sort of saying how much volatility can you accept and sort of get the decent return of Bitcoin. And the result was surprising, 84.9% Bitcoin, and then sort of leaving the remaining 15% split 60-40 between equities and bonds. They're saying that sort of is the best risk-adjusted return. So I'm guessing this was sort of one of those things that they put it out there and, say it's just research. We're not suggesting anyone does this. But, yeah, very unusual. They're saying if you start at a 2080 stock bond portfolio, so that would be sort of incredibly risk averse, maybe somebody in their sort of retirement age, then you would end up with a 12.5% Bitcoin allocation, because obviously that would be very, very low volatility, so adding sort of too much Bitcoin just throws it out completely, basically. So yeah, basically, if you like a bit of risk, then they're saying throw a load into Bitcoin. Or rather, they're saying it's done well in the past, and yeah, the data shows you would be better off doing it. They're not saying actually do it. But this was last year, and sort of before anybody considered that they'd be filing for an ETF. So it's interesting. This is sort of doing the rounds again, and making people wonder why they did it. And speaking of ETFs, just sort of thought I'd highlight the dates that we've got to look forward to. So ARK's ETF is actually first, or the deadline is first at least. So the first deadline has already passed for the ARK ETF, but they adjusted since BlackRock put theirs in. They've adjusted theirs to include the Coinbase surveillance sharing agreement, which they all have. You can see these are all refiling. And the second deadline for BlackRock's is the 13th of August. So 2 weeks away. The SEC have to say, presumably, no again. And then, obviously, November deadline, and then a January deadline, where they will, maybe finally say no. But then you've got BlackRock's first deadline is the 2nd of September. So a lot of people have been sort of thinking that the SEC want to make a concession, basically, and, say we're not completely against the industry. especially as you've got the Senate sort of passing lots and lots of bills to sort of legislate against or legislate positively towards Bitcoin and crypto. So maybe they would allow the BlackRock one, and they can obviously allow it, before 2nd of September. This is only a deadline. They've sort of delayed things before the deadline in the past, and have approved other things, other ETFs for other asset classes sort of well before the deadline. They could do it a few days after it's submitted if they really want. So some people are thinking that if they really want to allow an ETF, that maybe the BlackRock one gets approved in August, and they just sort of say there was an issue with ARCs and that gets pushed back, and as usual BlackRock goes in first, and then sort of for anti-competitive reasons maybe they will allow sort of a few of these other ones afterwards, but BlackRock gets first mover advantage. So a lot of different sort of scenarios that could play out with this, but here are your dates at least as to sort of when things have to play out, basically. So still just keeping an eye on DeFi Llama. I had sort of discussed switching my Cardano a while back into Solana, and sort of noticed that the total value locked in their sort of DeFi trading had been sort of kind of rocketing up really from the beginning of the year, and I sort of been keeping an eye on this. So sort of June, 1st of June, they were at 466 million ADA. July, 1st of July, they were at 554 million ADA, and we're sort of pretty much the turn of the month now, and they're at 607 million ADA. So it's sort of good to see that still going up. As I say, I don't look at it in US dollar value because I just think that's just moving with the token price, basically. A lot of people do seem to sort of look at the dollar amount that's in there, and if people have got a load of money locked in a DeFi contract and then ADA doubles, people sort of say money is piling into DeFi on Cardano, and you think, well, no, it isn't. It's the price going up and people have got locked money sat there. So I do tend to sort of look at how much actual tokens are going in and out. So, in the last month, this means people have put sort of, about 50 million Cardano onto the platform, which is good to know. So, the sort of comparison to Solana, to be fair, if you look in Solana terms and sort of come to the most recent sort of couple of months, it's been up and down. It was starting to sort of look good mid-June, but has sort of trailed off back down to 11 million Solana, has then sort of recovered slightly and sort of leveled off, whereas Cardano seems to be one great big long uptrend. So finally, just keeping an eye on the Ethereum Bitcoin ratio. I'd been sort of mentioned that I've been considering swapping some of my Bitcoin into Ethereum if we maybe sort of get another sweep of this low side of this falling wedge. There's nothing saying it has to do that, of course. It can sort of grind up, towards the upper side of the wedge and then just move out. If it is going to sort of outperform over the next bull market. We sort of seem to be getting some steady rises. Obviously, it looks very, very small on the weekly sort of, or the daily zoomed out time scale, but you sort of zoom in a little bit more. It's sort of right in the middle of the wedge. If you use sort of different exchanges or different lines, then obviously it can look closer to the bottom, closer to the top, that sort of thing. But it's certainly there, and I maybe just have to sort of bite the bullet and maybe just do that transfer sooner rather than later. One thing that I have been sort of keeping an eye on as to why. I sort of mentioned this before, the ultrasound money tracker of how much is sort of getting, how much Ethereum is getting burnt. And yeah, just sort of keeping an eye on the last 7 days. It's over 6,000 Ethereum burnt on a net basis. So 14,000 issued to stakers and 20,000, nearly 21,000 burnt in the last week. So come down from 120 million 225,000 to 120 million 219,000 just in 1 week. And so this sort of shows if you were to carry on at this pace for a whole year, you would lose over 1 million Ethereum. So sort of, as I say, compared to Bitcoin, obviously going up and going up at a slower rate over time, Ethereum is, as long as people carry on using the network, coming down overall. So, you know, if you potentially lose or drop 1 million Ethereum in a year, that's sort of quite a big amount on 120 million, basically. And obviously, if the burn goes up, then, or if, you know, usage of the network goes up, then the burn goes up, and this just sort of carries on being deflationary. And if the industry grows, then yeah, this could be sort of it's almost like buybacks from tech stocks, basically, which obviously Bitcoin doesn't have. It just has slower inflation. So yeah, I might just, I don't know, might have to accept as a sort of 18-month bet that Ethereum could potentially outperform Bitcoin and just sort of make that trade. Obviously, I might regret it if it then, you know, comes right the way down and I could have got more, but I don't know, who knows? Maybe I could do a little bit more. Just accept having, you know, 3.5 or 3 Bitcoin maybe and a load more ETH. So, yeah, let me know your thoughts on this trade, but it's certainly intriguing. So just looking at the coins for the week, not a huge amount going on here. Bitcoin down 2%. That has sort of been the bulk of the move, to be honest. Ethereum is completely flat. Solana up 1.18%, quite nice for the week when sort of Bitcoin is down. Chainlink down 2.8%, but that has been having a nice rise previous week. XRP down 3.6%. Cardano completely flat. Polygon, Matic down 5%. That's still struggling. Quant up 9%. This does sort of seem to do its own thing very much. Sort of moves very much not with the other coins. Audius down 2.7%. Power Ledger up 3.9%. Gala token down 11%. I sort of have been kind of waiting to put a bit more money in a load of tokens, and sort of some have gone up and some have gone down. I was looking to buy, so yeah, I've held off everything really. Basic Attention token 1.8% down, Net Computer 1.6% up, and VeChain 3.5% down. But obviously those are all sort of smaller positions, but those are the ones that I was sort of, these smaller ones maybe looking to top up, but I just haven't yet. So yeah, keeping an eye on them. But yeah, leave your thoughts in the comments below. Some interesting stuff going on, and like and subscribe. See you soon.